Alright guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So hopefully you guys out there are doing great, earning a lot of money from the market, and of course, taking good care of your own health. Don't let COVID-19 influence your life. Alright, so today will be the last episode of this masterclass, this short masterclass of S&D. And we'll talk more about confirmation and some psychological of trading. And coincidentally, today is the last day of the year 2021. So I'm going to take this opportunity to wish you guys a happy new year 2022. And hopefully the new year will bring a lot more money. And of course, we're talking about wealth and of course health. And keep trading. Don't give up. All right. I believe some of you might have given up, maybe due to some of your own mistakes or whatever it is. All right. So don't give up. One day, I believe definitely a lot of you can have financial freedom by just being a trader. All right. So without much delay, we'll talk about confirmation. And I will have 4 types of confirmation. All right, 4 types of confirmation. And now let me introduce to you the first type. All right, that is the price action. So basically, we have talked about the QM, the Quasimodo quick retest and the late retest. So this is more on the late retest. All right, so let me see what is it. Okay, so of course, what we have is that we have a QML pattern over here. All right, we have a QML pattern. And of course, we will have our MPL, maximum pain level. All right. So as we know, on the maximum pain level, we know where to sell. All right. We know where to sell. But is this a good place for a sell trade? All right. For a sell trade. So what is our confirmation? So first type of confirmation is very easy. Is that make sure for a late retest, there must be a lot of, there must be some price action. So the price action can be a fake out, a diamond, or a compression. So it's this type of price action. All right. So the notes that you need to take note of, right, is that the price action for the QM late retest can be a type of multiple type mix. So what does it mean? Is that it can be just fake out, or it can be just diamond, or it can be just compression. All right, but sometimes it can be fake out with compression. All right, fake out first, or compression first, or compression last, or maybe compression first, then fake out. Then it will be CPLQ, like I've introduced to you on a previous episode. And sometimes it may be fake out, a few layer of fake out. So that is possible of multiple layer of price action. So there might be some fake out at this point, and then at this point before the dive. So this is all your confirmation. You are sure that the price is going to nose dive from this area. All right. So the third note is that the higher the time frame, the better it is. So what it means that let's assume that you're looking at a M30 or M15, and if you compare it with a H4 or daily chart, which has a better chance of getting into this kind of trade, of course, definitely the higher time frame. But does it mean that lower time frame does not work? No, it does not mean that. But it's just that higher time frame have a better chance. All right. So only apply for QM late retest, and the successful rate is 60 to 80%. It's quite high, provided, all right, everything I've written here, successful rate is provided you have backtest it. If not, you tell me, I don't know where I can't see the fake out, I can't see the diamond, I can't see the compression. So that's no point of going into this kind of trade. All right, there's no point, because you can't even know where is the QML, you can't even know where is the MPL, and of course you do not know what is the price action. All right, so this is the first type of confirmation. All right, so second type of confirmation is what we call as a rejection. All right, rejection, it is very simple. So similarly, we have a QML. of course, this is a QML. It can be also be drop base drop. We call it as a RBS, SPR, right? As long as a area where you know where to trade or where to go into the trade. All right. So of course we have identified our MPL. We know where we should be trading. All right. We know where we should be trading. But what is the confirmation that we need over here? All right. So this is the first type of this is the second type of confirmation, which is what we call as rejection. So we have a bullish candlestick. All right. Then there is a rejection. There is a rejection. Then similarly, there is another bearish candlestick and there is a rejection. So important notes over here is that no price is close above or inside this zone. All right. As long as no price is close inside this zone, then this is your confirmation. There is a rejection. Right. So where is your placement of entry? This is usually we'll do it as a direct entry. All right, direct entry means that once this candlestick has confirmed, so this is a direct entry and the stop loss will be above here. All right, will be above, a bit above means that there is some spread. All right, depending on your own broker. So the second type of rejection is that something like this similar. I believe a lot of you have saw this kind of things before. All right, so there is a bullish candlestick, then there is a very, very big wick coming down from this area. So your entry will be this area and your stop loss will be above here. So this is the rejection that we talk about. So the point, the notes that you need to know is that can be at the QM late retest or the quick retest. So it can be possible of both. All right. So second is that wait for total rejection before entry. So you need to be very patient. You need to confirm that the whole candlestick reject close, then only you make your entry. All right, and of course you know where you put your stop loss. So the third one is the easiest to see among all confirmation. Yeah, we have 4 types of confirmation, and this is the easiest to see. Means that it's easier for you to you notice it. All right, in the chart. But however, it requires a lot of patience. You need to be very, very patient. All right. So higher chance but bigger stop loss. So this give you a higher chance because initially you have reject the price at the zone. But the problem is that it will have a bigger stop loss. All right, it will have a bigger stop loss. So every confirmation have a pro and cons. All right, so you have to choose which one you want to use. All right, you have to choose which one you want to use. Don't mix around too much. Just choose one. Just choose one. All right, so next we go for the type 3 of confirmation. And of course, this is my favorite. I let you know, I didn't put any star here. So this is my favorite confirmation. So it's a type 3, the QM in the QM. Means that Quasimodo level in the Quasimodo level. All right, so what does it mean? So let's assume that we have a Quasimodo level over here. All right, and then of course, we know our entry A zone and our MPL, our sell zone. So what happens is that there is a possible another smaller QM pattern, all right, in this zone when the price hit this zone. There is a possible. So usually this thing, all right, this pattern, it only occurs at smaller time frame. All right, let's look at some of the notes. So a quick QM retest happens inside a QM late retest. So it means that the whole thing is actually a late retest. Of course, there's some price action. But this thing, usually I'll say that I've encountered 70-80%. It is a quick retest. Means that very fast goes down, comes back and get the fresh supply zone and then goes down. All right. So here, this area have to take note now. There is some possibility you don't have a MPL. You will not have a MPL. All right. Usually, I will look for fresh zone, fresh supply zone or fresh demand zone. That is a, in this case, is a rally based drop or a drop based drop. All right. Very, very fast. The price reach and then just drop all the way. So always look at lower time frame for confirmation. So M30, M15 or M5. it really happens at a smaller time frame. All right. So fresh zone for entry, like what I said previously, and there's a successful rate of 60-70%. So the percentage here is not as high as the type 2, all right, the rejection. But however, let's see the advantage of this. Why I say that it is my favorite. So let's assume that this zone over here, this blue box over here, is around 30 pips, all right, 30 pips. But now if I go into smaller time frame, all right, small time frame, maybe M15 or M30, a fresh zone of a supply might be just below 10 pips, or I won't exaggerate, I'll say 15 pips, means that it's half of the initial stop loss zone over here. So isn't it it's a good thing? You already reduce your stop loss, means that you can go for a higher lot size. All right, so this is one of my favorite. Usually I will look at this kind of setup. All right, this kind of setup confirmation. So the last type of confirmation is multi-time frame. So this is very common, but some of you don't understand, so I'm going to explain it. Multi-time frame confirmation. So what does it mean? That let's assume that we have a QML. All right, you have a QML at M30. Wow, M30. Then you, of course, same thing, you know your MPL, you know your sell zone. All right. So what is the confirmation here? You need to switch to higher time frame. All right, higher time frame. Previous one, the type 3 is switched to lower time frame for smaller QML. This one, you need to switch to higher time frame for confirmation. So what does it mean? So this action means that this price over here might look like this. Might look like this. Might look like a drop-based drop. All right, it might look like a drop-based drop. So this is a zone, a fresh zone by itself in a higher time frame. So there is a higher possibility the price will reject from this area. All right. So you switch it to higher time frame, look for engulfing pattern. So need to check with higher time frame for engulfing pattern. All right. It may be we call it a rally. No, the resistance becomes support, RBS. It also will happen something like this. All right. So example here is that if you're looking at M15, M5, so you switch to M30 or H1, all right, to check for this type of pattern. And of course, if you're in M30, so look at H1 or H4. All right, if you can go into even higher time frame, that's better. But just that too high might confuse you. All right, so best if fresh zone for entry. So means that higher time frame, this is fresh zone. So it is the best. Sometimes it has some retest, means that the risk is higher. All right, if it's a fresh one, then you can confirm that the price will definitely reject from that area. All right, but the rejection, is it a lot or just a small rejection, which can give you a quite good risk reward ratio? It depends. All right, it depends on the whole chart thing. All right, I cannot just show you like this. Later I'm going to show you some example. So this type of multi-confirmation have around 70 to 80% successful rate. All right, so now let's jump into the chart to look at all these type of confirmation. All right, guys, welcome back to. All right, guys, so now I'm going to set an example over here. This is a good example of multiple kind of confirmation. So what we have here is price action confirmation and also QM in QM confirmation. So let's start. All right, so let's look at let me make a box. All right, this movement over here. All right, this movement over here, you can see the price is moving higher, high, higher, low, higher, high, higher, low, higher, high. Ultimately, there is a break. All right, there is a break at this point, which is confirmed as a QM level. All right, it can be confirmed as a QM level. But however, the price did not make comeback until quite far end. All right, so what we have over here is that two type of confirmation that I told before. First is that a lot of fake out. All right, we have a lot of fake out, which is price action. So we have fake out over here. You can see that we have fake out over here, and then we have fake out over here. All right, we have multiple type of fake out. All right, so, and of course, there is also a small one over here, small fake out. So there is a multiple level of fake out. Can you see it? Before the price comes back to this area. So this is the type 1 of confirmation. All right, fake out, QML, fake out. So let me get this out at this point, which I believe you guys understand it. All right, so the second one is the one that I told you my favorite. Okay, so now let's focus at this point. All right, at this area. So you can see that the price is moving high, high, higher, low, high, high, higher, low, higher, high, and then break low over here. All right, so this is also a QM by itself. All right, this is a QM by itself. So let's look back at the bigger picture just now. All right, bigger picture. So our entry point should be around this area. All right, our entry point should be around this area. All right, so you can see that the pips is around 28 pips. All right, 28 pips. So why do I mean by my favorite? So if I go into this area, now let me cut it into smaller time frame. Go into maybe 5 minutes. Okay. All right, you can see it very, very clearly. All right, very, very clear. This is a QM within a QM. The price went over the top, then break the low over here. So where is your QML? Very, very obvious. This is your QML. All right, QML, and then, no, sorry, this is your QML, and then this is your entry point, your fresh zone. All right, let's see, this is your fresh zone. All right, so the price went above a bit. All right, it's okay, because usually we'll have a small spread, a stop loss higher over here for the spread. All right, so you can see that. Let me make it different color. Sorry for that. Okay. All right. So you can see that there is a big difference between the initial stop loss and this stop loss over here. So now our stop loss might be around, you see, 3 pips. Maybe I'll make it half of it, 6 pips. All right. Another half, 6 pips. So I have reduced my stop loss from 28 to 6 pips. And what happened is that the price, all right. Okay. Where is the chart? All right, over here. So you can see that the price after moving into this QML, this small QML, it drops nicely. And I don't know how much the risk reward ratio. It should be a lot. It should be a lot. Even if you took your profit over here, right? Even you took your profit over here, I believe it's still a lot. All right, so you can see that this is the advantage of confirmation QM in a QM, the type 3. And of course, we can see previously there's an example of confirmation of type 1. And also, before I forgot, this is also a confirmation of type 2. All right, the rejection. All right, rejection. Maybe I remove this away, right, a bit. Let me get back to my box. So this is my zone. All right. So you can see that the price, what it did is that it rejects. All right. This is the confirmation type 3. All right. It rejects the price and then did not close in this zone. All right. So you have your entry too. So your entry will be from here to here. This is the risk that you are going to take. You can see that the risk is definitely be higher than even the initial one, but the confirmation is that it rejects from this zone. Very, very obvious rejection. All right. So it will prevent you from this kind of trade. You can see that it didn't go into the zone before it rejects, but this is an obvious one, rejection. I told you before. So you have a good trade too. Even though if you took this kind of confirmation, you have a good trade. All right, you have a good trade. So I believe there is a confirmation number 4 over here also. Wait a minute, let me put it into this. Okay, multi-time frame analysis. So we go into higher time frame, maybe H1. All right, you can see that this zone over here, now this zone has become bigger. All right, this is a bullish and bearish engulfing. You can see it's a bearish engulfing, and the good things is that it is still very fresh. All right, this is fresh zone all the way until here. You can see it. This is a fresh zone all the way until here. So this is a confirmation type 4. All right. So if you're not sure, whether this is a good entry, you go into higher time frame. They see that, oh, it's still very fresh. Right. This is a very fresh zone, and this is the only entry point. So even if a simple kind of a setup like this, you can get 4 type of confirmation. The only problem is that don't confuse yourself one against the other one. Just choose one type of confirmation and then stick to it. All right, you get used to it. Which type of confirmation you feel more comfortable with, right? So don't worry about losing trade. All right, sometimes you don't worry about losing trade because you need to learn from your losing trade. All right, so next we'll talk about psychological of trading. All right, we'll touch a bit about the psychological about trading. So you have to know a few things is that your mind is your money, because how you control your mind, how you control your fear, especially your fear, is how you control your money. So it's very, very important. Even in trading of I've been trading for 8 years. My experience tell me that trading psychology is the most important thing. It's not the strategy. It's not QML. It's not about the MA. It's not about the indicator. No, it's not. It's all about your mind, how you control, how you trade. All right, it's how you trade. So first thing is that there are top 6 reasons you fail as a trader. A lot of us always have. This thing always happens to us before. I have to admit it happens to me before. All right, before. So which are the 6 reasons? The first one is the bad analysis. You don't do your own how should I say, you don't do your own analysis. What you rely on is other people's source signal. Always people will call it, can you provide me signal? So this is the problem. Sometimes you have a good analysis, but when you look at other people's signal, so-called signal, and you do not know where or how they do their analysis, it confuses yourself, and you might miss out a good trade, or you might make yourself how should I say, your confidence level lower, because you feel that they might be better, I might not be better. All right. So what you need to do is that you need to do a lot of your, how should I say, your back testing. All right, back analysis. So second is that little to no emotion control. So this is common kind of reason of a lot of people fail as a trader, right? Little to no emotion control means that if I lose if you cannot control. You see, because once we go into a trade, right, it's definitely in a red color because of the spread. So from there, the starting point, you already have your emotional unstable emotional over there. So you need to control that, because if not, you cannot what we should say, some people say that cut the losses and then go with the gain, something like that. You can't do that because of your no emotional control. All right. So the third one is that failure to follow rules or no trading plan. All right, this is a very important. Always set your own trading plan. All right, always follow your own rules. Don't get those rules from other people, because the way of they trade and the way of you trade is totally different. All right, even I teach, how should I say, even I teach 3 students the same kind of strategy. All right, they might enter at a different stage and they might exit at a different stage. So because everyone is different, right? Everyone is different. You must know yourself well. All right, you must know yourself well, and you must have your trading plan. If possible, please have a written paper. Don't type it out. Don't print out. No, have a written paper. A paper, and then you write it down, and then stick it to somewhere. That is the best, because once you write it down yourself, you will remember. All right. So what is the type of trading plan that you should have is that how you should enter the trade, and of course how you should exit the trade. All right. Then here I already told you about a confirmation. What type of confirmation you should follow? Only follow one type. Only follow one type. And of course, where should you cut your losses? Okay. What happen if you cut? What happen if you need to cut your losses, or what happen if you need to make your trade break even? You must have your own rules. All right. So number 4, doubt your own skill. So it's something similar with the number 1, the bad analysis. Doubt your own skill is that you do not know your own ability. You don't know your own ability. You always have doubts about yourself. All right. You might be say that I'm a newbie in trading. I'm a newbie to supply and demand. So you have doubt about yourself. You have doubt about what is happening. How should I say, the analysis that you're doing. Right? Don't be such emotional and just trade like a robot. Practice more. All right, practice more. Sharpen your knife. All right. So 5th, no proper money management. This is I can't say anything because different people trade differently. For me, I don't trade all out. I don't trade full margin. I just trade a portion. I have a percentage of account for trading. So example is that every trade I depends. Some trade I might go into 5%. Some trade I might go into 10%. Some trade I might go into 20%. If I see the nice pattern that I remember that it always give me good profit, I'll go into 20%. That is the maximum I go in. I won't go full margin. Like some of the YouTuber out there, they might go full margin because they can grow their account fast, but they also can burst their account faster. It depends on how confident you are. For me, I always believe in stop loss, and I always believe in proper money management. That's why my account keep growing and growing. Even I have some losses. So what? My one win trade can cover everything and give me even more profit. All right. So the number 6, revenge trading. This is the worst of all reason I tell you, revenge trading. So example is that I have a trade. I lost this trade maybe 10%. Okay, the next trade I must go in with 20%. Oh my god, I lost it. Then what happened? I must go in with a 50% so that I can win back the previous money that I've lost. This is the stupidest things that as a trader will do. And I have to admit, it happens to me before. All right, it happens to me before. I'm not a saint. I make mistake and I learn from it. So over here, I already present to you top 6 reasons you fail as a trader. So you prevent yourself from doing these kind of things. All right. So the next is that trading plan. So trading plan over here is that I just give you a simple trading plan is that initially you must know what is your capital, how much money you can fund your trading. It might be $50, it might be $100, it might be $1,000, or it might be $10,000. It depends. How comfortable are you with trading first? All right. So the second is that how much risk are you willing to risk for each trade? So it's a percentage. It might be 5%. So let's assume your account is 100K, 100,000. Are you willing to risk 5%? That is $5,000. You can see the difference there. All right. So some people, their account might be $100. All right, $100. So they will say that, okay, I'll risk 50%. So it's $50. Okay, it's up to you. But if your account already reached 100K, are you willing to risk 50K for a single trade? You have to ask yourself. All right. So fix and then give yourself a rules, right, on that. So second is the entry. So what is your criteria of entry? And which method are you using? So over this mini series, I will introduce to you RBS, SPR, QML, quick retest, and of course late retest. So which one is more comfortable to you? All right, and then which type of confirmation you want to use? All right, which confirmation you want to use? So you have to know yourself well. I do not know. You don't. A lot of people ask me. I can't answer this for you. You have to know yourself well. So next we'll talk about the exit plan. So what is your exit plan? Where do you want to take your profit? All right, we'll talk about the first one first. Where do you want to take a profit? So some of you might take your profit at the previous high or the previous low. Some of you might take the profit at the next fresh supply zone or the next fresh demand zone. All right, and then some of you is the newbie. Maybe some of you are newbies. Feel that I do not know where is the next zone or where is the next high. Okay, you take the risk reward ratio. All right, 1:2 or 1:3. It's up to you. As long you feel comfortable about the way you trade, and then you can change it. I mean, at the time, once you can get control of how you're going to trade. Right. So the next one, exit, is what is your plan if the trade does not work? So you have entered a trade, then you found that, oh my God, I've entered wrongly. I mean, we are human. We tend to make mistakes. So what happened if your plan, what is your plan if the trade does not work? You cut losses, or you wait until you reach your stop loss? It all depends on yourself. You must know what is your exit plan. All right. Two way. One is to take profit. One is to cut loss. Exit plan. So the next is stop loss. Where are you putting your stop loss? All right. So where are you putting your stop loss? You know how, if you have to know your zone. For me, you have to know your zone. Some people, they will place it above the zone, and then some people, they'll place it above the previous high. All right, not the next high. You can see the previous high. So of the previous low. There is no wrong or no right, because you feel that it's comfortable. All right. Then what is your criteria to move your stop loss? Means that what happened if you're already in a profit trade? All right. What is your criteria to move your stop loss? And I believe previously I've done one video on the art of moving stop loss. All right. I might put the link somewhere here so that you guys can check it out. So that is just a guidance of how I place my stop loss. But how I place my stop loss does not mean you should do it, because maybe there are some things that I can see you guys cannot see. So what is the criteria if you're already in a profit? Where should you move your stop loss? All right. So this is the part of the process of trading. And the last but not least, you have your money, you earn your money. What is your target money to withdraw, and when are you going to withdraw? All right. I learned this lesson quite painfully. All right. I want to tell you a short story. So what happened was that many years ago, when I started trading, so I grow my account into around 130 over K US dollar, right? 130,000 US dollar. So I was thinking about, I'm going to be a millionaire. I'm going to be a millionaire. So I leave my money there, and I don't withdraw a single cent. Hopefully it will keep growing, because I grow it from 10,000 into 113,000, which is quite good for me. Then what happened was that I didn't realize that the broker that I've been trading is a fake broker. All right. I mean, I put real money inside, but I didn't realize that the broker is a fake broker. So what happened was that the broker suddenly went missing, right? I was in total loss. I don't know what to do with my life at that point. But of course, I picked myself up and then started trading again and again. So this is a lesson very, very well I've learned, a painful one. Always know where to withdraw, right? It's good to grow your account, but withdraw some of the money, all right? And remember to spend. This is very, very important. The money that you earn, you have to spend, not all, a small percentage, maybe 5% or 10%. Treat yourself something good or buy yourself something good, you need to reward yourself. You must know that kind of feeling, all right? The feeling of earning money from the market, all right? Then the rest you might keep it as a whatever fund you have. So withdraw target. Example is that maybe you have you have grow your account from $100 to 5,000. All right, this is the example. $100 to 5,000. Withdraw half of it, 2,005. All right, and then maybe spend $500 on something very nice to yourself, and then the rest 2,000 keep it. Okay, so the question over here is that now your account has been reduced to 2,005. Then remaining balance is 2,005. The question is that is the 2,005 your money? Always think about it. Is that your money? All right. The answer for me, all right, is not my money. That is the market money. That is the market money that gave it to me. So if I think it this way, I'm able to trade even better because I have no fear. What happened if I lost everything? So you think about it. What happened if you lost the 2005? How much did you really lose? You lose only $100, your initial capital. But is it really you're losing that? No, because you took 2005 and you still have the 2000 with you. You still can go for more round of how should I say, round of trading. So don't worry. You must have this kind of trading plan. All right. So next we'll look at you have to know yourself well. All right. You have to know yourself well. So what do I mean here is that you always have to ask yourself this question. All right. Ask yourself this question. Are you a market specialist or a trade specialist? Means that okay, this is one good question, you know. All right. What is a market specialist? So example, I trade gold. So I may consider myself as a market specialist on gold only. Gold. I only focus on gold. Maybe some people focus on pound, US dollar. All right. So you're that market specialist or you're a trade specialist. Means that I really learn QML. Okay, I learn QML. I learn about Quasimodo level. I learn about supply and demand. And I focus on Quasimodo on all type of market, even cryptocurrency, even Dow Jones, even whatever you can get, share market. So which one are you? A market specialist or a trade specialist? You have to ask yourself. Then how many hours of daily screen time do you allow yourself? Practice. Even though you're already earning a lot of money, you still need to practice. All right, you need to learn your mistakes. You need to know what is happening. So how many hours daily screen time do you allow yourself? Maybe 1 hour, maybe 2 hours. It's okay. You don't say that, okay, I'm already an expert. I already spent 10 minutes. That's all. End of story. No, you don't do that. You will keep practicing, practicing, and practicing. Even, I tell you what, very simple. Maybe some of you know, maybe some of you do not know. Let's say Cristiano Ronaldo. Right? I'm a Manchester United fan. So Cristiano Ronaldo, we'll talk about that. He's 36 years old. All right. So he's considered one of the greatest footballer. All right. I mean, some people might say, some people might don't agree. Yeah. All right. It's okay. But you look at it, every day, every week, he will still keep practicing training. He don't say that I'm 36 years old, I will stop. I'm an expert, I stop. I already have the best footballer of the year, I stop. No. You don't do that. It's similar with yourself. You don't do that. Even like LeBron James, right? He don't do that. They will keep practicing, right? Until a day you say that, okay, I quit trading. Then okay, then you can stop practicing. All right. So the next is that which trade session do you trade? So this depends on, we have 3 types of session. We have the Asia market, we have the Euro market or the UK market, and of course we have the US market. So which time frame do you like to trade more? And you must know that session better. All right. So I won't say that I will stick to a specific session, but you must know which one you have to trade. One of the reasons is that every one of us, if I believe a lot of us are watching here, our time frame is different. All right, time frame. Our time zone is different. All right, some of you might be from US, some of you might be from Europe, some of you might be from the Africa, and I'm from Asia. So our time frame is totally different. Like me, I only trade maybe a half part of the US market. That's all. I will trade until I'll say lunchtime of, I think before lunchtime of US market. That's all, end of story, because it's very late for me. So different people, different type of time zone. So you have to know yourself which session you trade. So what time frame you are trading? Important. Stick to a time frame. I always give an example, easy for you guys to understand. So example like me, I trade gold, right? So what type of time frame I trade more is that H4, M30, M5. I know myself, H4, M30, and M5. And then maybe some of you like to trade maybe 1 minute. Some people like to trade 1 minute. Like adventurous. It's okay. It's okay. As long you can get hold of the price action, right? It's not that it's a permanent thing. All right. You must know yourself. All right. So which trading setup do you trade? This one is depends on you. Some of you might still like to stick to QML. No, still like to stick to the indicator. Some people like to stick with indicator plus QML, supply and demand. Some people like Fibonacci. Some people like Elliott wave. It's up to you. All right, but you must know which type of trading setup you have to be familiar with. All right, just stick to it. All right. So the last but not least, what is your exit plan? Your exit strategy. I always think about. I don't always think about the entry first. I always think about the exit, because the exit first is that is where I pick my money, and the second is that is where I cut my stop loss. So I must know where is my exit plan instead of my entry plan. All right. So I believe that's all for this episode, the episode 10. And I would like to thank you all for watching all these episode, the master class from the first episode to the episode 10. So I would say that it's not totally complete of supply and demand strategy, but at least you can get a few hint or few tips on how to trade supply and demand using QML. So after this, I will do a lot more. I call it as a back testing and then trade analysis on different kind of strategy. All right. So hopefully you guys enjoy all this episode, and if you like the videos that I made for you, do give me a like and do subscribe. I'll promise definitely there will be more and more goodies coming in. All right, because I've already packed everything. Because how should I say, to make this short